Hello everyone, welcome to this video. This video is going to be about a very important topic, very important question. If you're going to get a car, you are definitely facing this question. So it is about if you should finance a car or you should lease a car. And I'm going to be talking about this topic as an accountant. So we are going to talk about the tax implication of these decisions as well. Leasing or buying on cash, or financing. It is a big decision, right? It's a decision. It's a long term one. It has a big monetary impact on your wallets, right? Throughout the term of the agreements that you do, and then it is it's not a small amount, and you have to stick with this decision. It sticks with you for a long term. So basically, my purpose of making this video is to explain a little bit about what lease and finance is, which you can get you can get that information from a lot of sources, but definitely talk about it as an accountant for self-employed people and small business owners, especially employed people as well. It's definitely gonna work for anyone who watches this video. It's definitely gonna help you. But I'm definitely gonna talk about the tax deductions, how the tax deductions work, how the tax impacts what is the impact of this decision on your tax returns, right? So that's very important, because a lot of people expect that from an accountant, right? I'm going to switch to my computer and show you my screen where I have made a very simple Excel spreadsheet, in which I'll be doing some numbers, and you'll get the idea how it works. Let's move to my Excel, accountant's weapon. All right. So let's discuss it over there now. All right, welcome to my spreadsheet. So it's a very basic spreadsheet that I made just to explain the concept, how the numbers work, and what the tax deductions look like in each scenario. Again, it's not as simple as it looks on the spreadsheet. There is a lot of factors that need to be counted in when you're making this decision, non-financial as well as financial, and sometimes the non-financial factors become more important. Let me tell you. All right, so coming to this spreadsheet, I'm gonna keep it very simple, keep my language very simple. I'm not gonna sound like accountants. Try my best, and I will also give a link to this spreadsheet if you want to use it. But definitely you can find more complex and advanced spreadsheets in the online for this purpose. But just to do the understanding, do the basic maths, this should work. All right, and definitely this will help you make the decision and understand the concept of tax, how tax, what kind of impact this decision would have on taxes. So let's say we go to a dealership and we get the car on finance. So basically, it means that we got a loan from the bank, and the car cost was $1,000. So that is that the the amount that we got from the bank was $1,000, and the bank said, I'm going to charge you 10% interest on that, and the repayment of the principal is decided at $200 per year. Let's say 5 years. We got the term is 5 years, so we're going to be paying $200 every year to the bank as the repayment of the principal amount, and the depreciation is let's say 20%. All right. So don't worry about the numbers over here. I'm going to explain those to you. So what happens is that in the first year, you see the car loan stands at the amount $1,000. Repayment, I made a repayment of $200, and the interest on is calculated on the outstanding amount of the loan, the principal amount. So that was 1,000. So 10% of 1,000 would be $100. And so basically, what I paid in the first year to the bank was $300, right? Which included this repayment amount, which was the principal payment, and the interest amount. So it made $300. All right, no problem, you got it. Now, since this car is mine, so I have to, now at the end of the year, I'm doing my tax returns, right? And as I said, that I am a self-employed professional or contractor, or a small business or any business, right? So I can do the deductions. If I am an employee, the deductions won't really matter. But for self-employed or businesses or corporations, it matters, right? where you can claim those expenses. All right. So I have to calculate the depreciation, also called capital cost allowance, CCA, amortization of the asset, all those things. So what's basically that? It's a use expense, like usage expense. You're using the car, so the car value goes down because of the wear and tear, right? So how do we calculate that? Simply, it's the car value was $1,000, and I calculated. I said, okay, the depreciation rate is going to be 20% each year. So the first year I'm gonna get the $200 as the depreciation, right? And what is the tax deduction now? So tax deduction is uh, that what expenses you can claim as a deduction from your taxable income or from your income, not taxable income, from your income, right? So this is basically so for example, your income is $100 and your tax deductions is $30. So that means $70. 100 minus 30, that $70 you're gonna be is gonna be taxable, right? So over here in this case, what deduction would you get at the end of the first year, or in case of financing a car? So it is basically the sum of the interest that you paid and the amount of CCA or depreciation. So it's basically the sum of these two expenses. One is the interest paid on the finance, and the second is the depreciation. So if you look at the first year, we got it, the tax deduction was $300. And over here, I've just calculated a ratio. So this ratio is basically what is the tax deduction to the payout or the car payment ratio or the cash outflow ratio. So basically over here, I'm looking at my wallet, what is going out of my wallet, out of my pocket. This is going out of my pocket. And this is what I am saving on my tax return, or what I'm claiming on my tax return as a tax deduction. All right. So let's jump on to the second year. Now my car loan comes down to 800 after I've paid 200 in the first year. Again, I make another $200 payment. 10% interest will be calculated on the outstanding, which is gonna be $80. So in this year, I'm gonna end up paying $280. So again, if I do the calculation of the depreciation, it's going to be 20% of the car value. So last year my car value was 1,000, 200 was the depreciation. Now it is $800. 20% of $800 is 160. So 160 is the depreciation that I'm gonna claim for this year on my tax return or in my financials, and interest I paid was $80. So add these two, I'm gonna get $240 as my tax deduction. Now, one thing you have to notice here, that in first year it was $300, the tax deduction. The second year it is $240. And now I'm not gonna explain all the 5 years, but I'm just gonna jump to the conclusion or to summarize this, right? So you can see $300 first year deduction, tax deduction. Second year, the tax deduction is decreasing to $240. The third year, it further decreases to $188, and the fourth year, $142, and in the fifth year, it's just $102. That is the tax deduction that I will get. The reason for this is that basically the value of the loan, the loan is going down. This loan, because as I'm making the repayments, the amount of the loan is going down, so which is causing the interest to go down. And also, since the value of the car is going down because of the wear and tear, the depreciation expense is going down. So as I said, that the tax deduction is the sum of the value of the interest that I'm paying every year and the depreciation that I can claim every year. So that makes it, the tax deduction keeps falling every year, keeps going down every year. So at the end of the year, let's say at the end of the term, let's say 5 years, total repayment was $1,000. This is the loan, I repaid it, good. The second thing is $300 I paid in interest, and you should notice that in the first year it was the highest, and then the fifth year it was at the lowest level. So in the early years, the bank charges the most interest out of the deal, right? So total amount that, again, out of my pocket, total amount out of my wallet was $1,300 that went out, okay? And against that $1,300, $972 was the interest that I was able to pay. So $932, $972 tax deduction I was able to claim. All right. So if I look at the ratio that of the total amount over here, I just did the summary. So my cash outflows is $1,300, and the total tax deduction that I would get is $972. So basically 75%. So after 5 years, I'm gonna be able to claim 75% of the total cash outflow, right? Although it is very close to the cost of the car, which was $1,000, right? $972 cost of the car. So I am almost, what I've claimed is almost equal to the cost of the car. But when I compare it with the total outflow, which includes the interest, then it is just at 75%. Remember, you're buying an asset, or you're paying interest on an asset which is depreciation, which is depreciating every year, right? As you can see here. All right, let's jump on to the lease. Lease is simpler. Again, I'm just gonna be using the example. So the car was priced at $1,000. Interest in this case, let's say I get this lease, usually there is 1% or 2% interest, but let's say, just for the sake of simplicity, I would say that there was a promotion going on, so I got this deal at the interest was 0%. The payment, every month payment that I was supposed to make was, so usually what happens is that in a case of lease, the cash outflow is usually less than as compared to the finance, right? So let's say I'm paying $150 every month, right? And buyback, so the bank says that, okay, you can, at the end of the, not the bank, actually, the dealership says that at the end of this um, 5 years, this term, you can actually buy back the car from us, right? So if I go, and they said, okay, at the 30% price, so the 30% of this is, let's say, $300, right? All right. So let's do the maths. Very simple maths for lease. So basically, your lease is basically you're just renting the asset for the car for a longer time period with a, so there's an agreement between the lessee and the lessor, right? So basically, the car price doesn't really matter. As I said, that I just copied it from the previous one. So over here, you can see that first year you're just paying $150, right? And that's the payment that you have to make every year, right? All 5 years you're making the same payment, right? And in the there's no interest, as we said. So the car payment is going to be $150. The total amount that is going out of my wallet first year is $150. How much tax deduction I'm gonna get? So I can claim all of it. So all of it is claimable, although there is some limits, by CRA on the amounts of deduction that we can discuss later on, or I'll just quickly talk about it later. But over here, and the business portion of the things, again, for self-employed, if you're using your own car, you have to kind of look at the business portion of the expense and the personal use. So we are considering 100% is claimable, right? So over here, the tax deduction is going to be $150. So if I look at the ratio, it is 100 year, the first year, right? And if I go to finance, the first year, the ratio of deduction to payout to outflow was 100% as well. In lease, let's jump on to the second year. So second year, as I said, the value doesn't matter. So the second year, I'm making a payment of 150 again, and again, the tax deduction that I am able to claim is all of it, so 100%, right? The second, if I compare the second year with finance, I was claiming 86%. As you could see, the tax deduction in finance was decreasing. Every year, I was able to claim less amount as compared to uh, the the lease, right? So if I fast forward to the fifth year, I pay, all the amounts that I've paid up is total amount I paid was $750 during these 5 years for the same car.
and I was able to claim all of it, $750, as a tax deduction. So whatever I paid for the for as the lease payments for the car, all of that amount I was able to claim on my tax return. So that's a very good thing about uh, leasing a car. And now, going to the summary, if I look at my cash outflow, $750 is the total amount that went out of my wallet, right? And the total tax deduction I got on that amount is 750, which is all of it I was able to claim, right? But if I go back on my finance thing, the total cash flow was $1,300, while the tax deduction was $972, which was 75%. So lease is giving me more tax advantage when it comes to tax deductions, right? And let's say I buy back the car. I had cash and I just paid the cash to the. I really like the car, so I paid the cash to the dealership, $300. And after paying that, my total cash outflow would be 1050, right? So I get the same car for 1050. I claimed all of the what do you call it? Claimed all of the lease payments on my tax return. So I think this looks slightly better, right? Now, again, as I said, that there is a lot of other factors that you have to consider in. I will go to my last sheet over here, where I've just put the pros and cons of each, of leasing a car or financing a car, right? So in this scenario, now that you know what the how the tax works, what is the tax effect of each either finance or lease. Now you would know what is the other factors that are the positive and the negatives. So for financing a car, the pros are ownership. Obviously, you will own the car at all the times. No mileage restrictions. You can drive for as many miles as you like. Ability to customize. You can customize the vehicle. No restrictions. This is your own vehicle, and lower insurance costs. Right. Uh, while the cons for this financing is gonna be what are the downsides are the higher monthly payment. As you could see that it's the same vehicle that we compared for finance or lease, but you were paying less, you're making higher monthly payments in finance. There's going to be a higher maintenance cost for that. Then there is a depreciation risk, as you could see, because this asset is your own. So the value, what if the value just goes down? What if the manufacturer of the brand, it just closes down? So that means the vehicle that you're holding, it just lost its market value, right? But you still have to repay to the bank. So there is always this risk of impairment of the value of that asset, right? And then the possible negative equity as well. Again, as I said, that what if the value of the asset goes really drops, or the market value of the asset really drops? Then you are looking at a negative value. You still have to pay the same amount of loan, while you cannot recover the same amount of value from the market if you go and sell it, right? In case of lease, the pros are gonna be lower monthly payments. One of the best points, like you're using the car, you're getting the benefit out of it, but the payments that you're making for that use is far less. Less maintenance costs, more flexibility to change cars every 5 years, every 4 years, whatever the terms are. You can just go ahead and change the car. No hassle of selling. You don't have to worry about selling the car or trading in and this and that, because you just go in, give the keys, and get the new car after whatever the terms are, if you get that chance, right? Or that offer, right? What are the cons of leasing a car? Absolutely no ownership. 5 years, you just drove it, use it. Now you have to return it. At that time, you might say, "Hey, I really, what if I was financing it? This car would have been mine now." But again, you paid like just a rent for the car for that year time. Mileage restrictions. Yes, you have mileage restrictions, 100,000 miles or whatever. So you have to keep your usage of the mileage check. fees for wear and tear. Again, if you're giving the car earlier back to the dealership, there could be a penalty. Then the car has to be in a good condition. When you're returning it, it's not that you just destroyed the car and just returned it to the dealership. You're gonna have to pay for all the wear and tear. Insurance cost is going to be slightly higher for leasing a car. So these are the main factors that kind of differentiate these two, and most of them is a positive of one a scenario is a negative for the other one, right? So I would say that again, it's a big decision. Keep all the factors in. I hope this spreadsheet help you for in this scenario. And just the 1 minute on the last point is that yes, there are certain limits on on how much you can claim on your tax return. For example, this year CRA the amount is $34,000, so you cannot if you got a car which is under $34,000, you can claim all of the expense, all of it. But if it's more than that, you cannot claim that expense. And in case of lease, around I think $950 you can claim for the lease amount, not more than that. And then there is HST factor again. That's a separate issue. That's a separate topic. I'll try to make a video on it. If you really want, you can let me know in the comments. If you have any question, put down on these comments, and any recommendation for a video. If there is any topic that you think I should make a video on, please put that in the comment box as well. All right, guys. I hope this video helps you. Subscribe to the channel and like the video and share it. Have yourself a great day. Get a car, enjoy safe driving, and good luck. All right, bye.